It's 4 o'clock in London, midday in New York. There have been a few daylight savings time changes around Europe. 12 midnight in Hong Kong, 3 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 32, Episode 4, that is in the aggregate episode number 190, starts here. What a fascinating deal. It reshapes the cap table of BMLL in a simple core duopoly of stockholders, as the monobourse, EU monobourse system is a problem and utterly flawed from the base level up of EU national economies. From the smallest economy to the largest, creating an EU monobourse makes no sense whatsoever for the dynamics of capitalism in Europe. And indeed, that was an op-ed which was written by yours truly, which should be on the screen at the moment, but it's not. At the same time, the CFTC, amid concerns the Trump administration has lost the plot, are going all in on crypto, and new chairman Selig is a noted crypto advocate. Finally, this week, the LSEG have a new swap clear deal, which ought to remind LSEG that markets are the thing that got them all the way to, unfortunately, doing a dismal deal to buy the old Reuters Financial somewhat refinitively. We've got the panel. We're going to be talking markets and market structure today. I'm delighted to welcome back Mark DeBedis, a recently retired from SIBO, having been a co-founder of BIDS. Mark has a lengthy pedigree at the nexus of tech, product development and markets, while Anne Berg is a leading expert in commodities, commodity futures and food security issues, a former grain exporter, futures trader and CBOT director. These guys are lining up today with a new guest, someone who's been on the show previously but not on the panel. Delighted to welcome back Ira Harris, an active macro global trader with over 46 years of experience in all areas of commodity trading, including broad expertise in cash currency markets. Ira is an active macro global trend trader and a regular guest on CNBC and Bloomberg. So, ladies and gentlemen, well, let's start with the macro, I think, out there. Ina, what does the Melee victory mean for markets? All ideas are welcome. Let's start with you, Anne.
Well, it's according to the mainstream media, it's a great big surprise. I just am quite grateful that such a figure in the world of politics right now has been successful and has managed to pull off a landslide victory, it appears. Which, as I say, took everyone else seemingly by surprise, except for you, Patrick, and a few minor but well-known consultants. I think it's a great deal just because it embeds the United States with a capitalistic partner. When we see China that's nibbling at every single corner of South America, and you've seen Peronist-style governments everywhere. They're either socialist or communist or military dictatorships, which is not good for United States. So I think it's a big win. And it's also a source of minerals. There's large lithium deposits in Argentina. So I think it's all around very good.
Yeah, Ira, what do you reckon about what's been going on in Argentina?
Well, I think Ann is 100% right. And I go back to a piece written by somebody who I read regularly, the Doomberg Group, the Green Bird, as is known. And he wrote about this about over a month ago. And he discussed what the bailout would be based on. And it's going to be a lot more than lithium deposits that are going to secure these loans. There's that Vaca Muerta, which is a potentially huge shale deposit, as well as other energy deposits that have gone, of course, underutilized. As Argentina has not treated capital very well, probably since we could probably argue since the early 50s, but don't cry for me. So I think that we'll be very surprised to see what they're willing to sign on to for a short infusion of liquidity. But they may not even need as much, especially now with his victory, which really shook people because, of course, the previous local elections didn't fall his way at all. But this was very confused election. So this will all be secured. How the final deals play out, we'll know. But as I said, tongue in cheek, if as long as the Argentinians were busy selling grain to the Chinese, the United States just should have given them about $10 billion worth of beans. The Argentinians crush them because Bunge and others have huge processing plants down in Argentina, and just ship them to the Chinese. It would have been a perfect. We almost redo the Great Russian Wheat Deal, right? When they were busy shipping wheat to the Italians because they were buying it so cheap from the Americans. So no great surprise there. It will get interesting, and as love them or hate them, but when Trump comes to transactions, they're actually pretty good in this administration. With Bissent and a few others, seem to know how to pull certain strings. So we haven't seen the beginning of it yet, but it will be interesting to see what secures the deal.
Fascinating altogether. And Mark, what do you think about what's been going on in Argentina this week?
Well, I defer to Anne and Ira on the commodities aspect of that. Their perspective's really interesting there, and maybe I'll be interested to hear more, actually. But for me, from where I sit, I'm here in Vancouver in Canada, and all I can do is contrast this situation with the mess that Canada's got itself in. On the same topic, really, which when really the headline of this one and the Canada situation is, of course, Trump, because he is the number one factor in both cases. It seems very clear that the Argentinian voters did the complete reverse of what Canadian voters did. Back in earlier this year, January, when Canada had its election, Trump had just got in. The leading contender there was a conservative called Pierre Poilievre, who everybody knew was just going to be a walkover. He was going to win that election easily. Trump gets in, and immediately the pundits start labeling Poilievre as a Trump, as a Trumpist, and he of course denied it, but he lost. He even lost his own seat. So the contrast between that and what the Argentinian voters went for is basically, if Trump's on our side, then that's good. Let's go with our man, is a fascinating contrast. And I wonder, going forward, there'll be other elections like this over the coming 3 years. I wonder which scenario will play out. Will it be the Argentinian or the Canadian when it comes to other elections where Trump kind of inserted himself into it? So for me, that's the most interesting aspect of it.
Yeah, I mean, that Trump gauntlet where he threw it down and he said, okay, if you don't vote this way, I'm going to take away my $20 billion credit line, et cetera, et cetera. It was quite fascinating. And did you want to add something about the grain side of it or any of the other commodity issues?
Well, I hadn't thought about it the way that Ira was describing about the reverse of the great grain robbery, but that's an interesting observation. Argentina is the only country that I know that actually taxes its farmers. It taxes it on the exports. So, of course, the 20%, or I forget what they've got for tax right now, pushes back onto the farmers 100%. So it'll be interesting to see what further negotiations could possibly take place. But the idea maybe of selling soybeans to Argentina, because they are the largest processor of soybeans into meal and oil that I know of, and that could be quite a game. But one more thing to consider that all plays into this is that China has not bought a single soybean from the United States, where last year I think they bought 40 to 50 million tons or something. They are the market. They import 60% of all the tradable soybeans. So this all plays into the South American state of things as to how it's going to play out. I'm not quite sure, but I think that there will be a deal so that yes, China is going to be back into the market for U.S. soybeans and maybe some Argentinian soybean oil and meal if we ship it just down south into the processing.
Interesting that the peregrinations of soybeans all the way around. And of course, another thing we've been looking at the peregrinations of this week has been gold. I mean, that seems to be quite remarkable what's going on at the same time as every exchange on the planet has suddenly decided they need a gold contract. And even was it LBMA have decided they needed a London gold future, whatever that means. Any thoughts on that, Anne?
Yeah, I have a lot of thoughts on that. I guess I see it as really a classic bubble that's going on. And, we've now dipped below the $4,000 mark for gold per ounce. It first 3 years ago or so, or 4 years ago, we started out, the world started out with, doubts about the U.S. currency as the reserve currency. And there was a whole movement to form this BRICS currency. And of course, that really never happened because the currency would only be as good as the underlying, central banks. And the whole trend of the BRICS has been to depreciate their currencies against the U.S. dollar so that they would gain an export advantage. But that said, there has been a dollar diversification, let's call it, and gold buying by the central banks. I think they've been buying sort of 1,000 metric tons per year or so. But then that's all been followed by this rush to the ETFs. And I read with some amusement, I think, just that the Gold Council counts gold demand as purchases in these ETF securities, which I never heard of before. It certainly couldn't have been true in the commodity market to count that. The USDA would never count that as part of the demand that went into these securitized futures contracts. So then, there's just been this huge peddling of gold, whether it's coins or bullion or ETFs or whether it's futures and so on. That always follows the certain fundamental. In other words, every bubble has fundamental aspects embedded in it, and this is why it becomes a bubble, is because there's so many still believers in of this bubble mentality, way beyond when the actual demand, and now jewelry demand, has gone down. So, at any rate, I think that we'll have to see where this goes, but I would distinguish commodity markets from security markets in that commodity markets go along kind of along the floor. They bounce along the floor, and then they have a very sharp spike upwards markets. And then they always overshoot, and then they fall back again. And I think we're seeing this pattern emerge here. And I would, again, distinguish that from securities, where you have very long, broad bull markets for decades and low spike bottoms.
Yes, that's quite fascinating altogether, and certainly I'm reminded of the Onion headline, wasn't it, from 2008 or 2009, retail investors demand new useless bubble or something like that to invest in. Ira, what do you reckon?
Okay, well, so Ann covered a lot of ground there. What do I reckon? I think, Patrick, last time I was on with you, we discussed gold, and gold was perplexing because I kept waiting for it to correct. But I'm a trader, so I'm always adjusting. But always believe that when real yields, and I'm talking about overnight money yields, not the longer duration, but when the real yields, especially in 22, 23, when the Fed raised interest rates over 5%, so the effective real yield by the measure of data that we have to deal with was probably about 2.25%, which usually causes ructions in the gold market because gold hates real positive yields, because if money is giving you a real positive yield, why do you want to hold gold? And yet gold couldn't correct back into that magic area of about 1580 to 1620 and just kept holding it 1780, 18. So I said something else is up here. And it's evidently what we've seen with the central banks accumulating But I think it's more than that. I think the sovereign wealth funds are a major new actor in a variety of markets, and I think this market is definitely one of them. And they not only do they have vast amounts of money, they know how to use leverage, and they also have the ability to create narrative headlines. So this makes it, from a trader standpoint, very exciting. Yes, we know central banks have been buying and receiving in response to the Ukraine invasion by Russia. And interesting, so I was interested in listening to Mark, and I couldn't agree with him more because Trump cost Pierre that election. He never wants to own that. But I think Canada needs to get its act together. And, you know, the person who now resides as the prime minister, of course, was the one who sold off all Canada's gold. The Central Bank of Canada owns no gold, even though Canada is a significant miner of that material. And I would suggest, as I listen to Mark, it's time for Canada to wake up, to slough off the dirt of Trudeau and his sidekick Freeland, and I would say open up the spigots for the energy and start really mining the rare earths and other raw minerals. And if I was doing it, I would say it's time for Canada to set up a sovereign wealth fund so that they could actually aid and abet the fiscal situation of Canada. But I want to hear Mark talk more about that if I could push that.
Sure. Yeah,
Mark.
great segue there, Ira. That was really good. You're talking about selling gold reserves. I want to know what Gordon Brown's position is, the Chancellor from the UK, on gold, because I think when he becomes a buyer, then the bubble's reached its peak, because he did this similar trick with as Carney selling all the UK's reserves back in the early 2000s. But I think, and talking of people like that, typically it's taxi drivers and dentists, right? When they come into the market, that it's peaked. I got a text from my daughter the other day, who's not a great follower of markets, asking me, should I be buying gold? So there's a few indicators there. But coming back to the Canada situation, it's kind of borderline insanity, I feel, the way that, especially over the last 10 years since Trudeau came in, the way that Canada, the Canadian government, federal government, has viewed the Canadian economy. I mean, you're quite right. It's really the global powerhouse for all kinds of commodities, Canada. And it's absolutely insane that the commodity market here, the commodity business, is right at the bottom of the table in terms of the federal government's concerns. And frankly, and this has been a complaint ever since I've lived in Canada. I've been here 25, 30 years now, and it's always been an issue, especially out in the West, particularly Alberta, Saskatchewan, and that. But I feel that it's becoming potentially, there's a trigger point coming here where, we had the Quebec referendum back in the 90s, where Quebec wanted to separate from Canada. And at the time it was, it was a major crisis, nearly happened. I feel that now, especially from the perspective of Western Canada, they might not mind that, a Quebec separation, because the Quebec presence in the federal government is one of the main drivers limiting development of a lot of the commodities, especially energy, obviously, but I think others as well. And so, the politics of all this is very fraught, and I wouldn't be surprised. You don't hear much from this part of the world. We're pretty much a minnow, despite being the second largest landmass on the planet. But I wouldn't be surprised if, in terms of country size, that is landmass, I wouldn't be surprised if next year or sometime in the not too distant future, that whole question of federal Canada staying together comes up on the agenda. That's my little prediction, if you like, early New Year's prediction.
That's quite fascinating altogether, because, of course, the possibility of Western Canada unleashing all of its rare earths would almost immediately solve the USA's rare earths problem, and presumably make Western Canada as popular as Ottawa is unpopular with Washington, D.C.
Yeah, it's true, and this is the the irony of the situation is that Trump has basically punished Canada for being way too reliant on the U.S. Over many decades now. And it's true, Canada really it was easy, right? You're sitting right next to the most powerful economy on the planet. The easiest thing to do is to just use that and don't look for, alternative ways out. And I think, Trump maybe in many ways did Canada a favor with, forcing them to rethink, how should we view our economy? I mean, I'm a classic example of that personally. I've lived in Canada now for all these years. I've never done any business with any Canadian firms. Everything I do is with the US. And, that story is repeated over and over again. So on the one hand, it's great that Canada should be looking further afield, but, you're right. Unfortunately, the easiest way forward and the most logical economically way forward is to do exactly what you're saying. Yeah, just exploit those reserves and then, work with the US and become, a proper partner again. So that's got to be the strategy. Whether anyone will follow it, let's wait and see.
Anne, anything to add?
Not really. I was just thinking, isn't Mexico now our biggest trade partner? It overtook Canada. So, we're seeing, again, regional changes, depending upon maybe where the politics of the government lies. I'm not sure that Mexico is able to overcome all of its issues with narco trafficking, but it's actually, I think, helped with Trump's agenda, obviously far more than Canada has.
Well, I think, isn't Mexico riven with huge amounts of offshore production for not just American manufacturers, but also a bunch of Asian manufacturers, et cetera, as well, who've all used NAFTA in order to manage to exploit
transit point. I think you've called it a transit point for for China and so on. And China's diversifying. I think 2 or 3 years ago, we had a zero trade deficit with Vietnam, and now it's something like $190 billion. I mean, where does that come from? So China is moving into whatever area where it finds a soft underbelly, I guess, and ships its goods there so they can be transshipped into, this insatiable United States market of consumerism.
Yeah, it's quite fascinating altogether. Ira?
Yes, Patrick.
Just curious if you've got anything to add. On the overall nature of the offshoring of U.S. industry and how that impacts markets, or the offshoring of Chinese and Vietnamese industry in order to move.
Well, yeah, people got and wait for India to come. I did a podcast yesterday with the FRA out of Canada with David Wu. We talked quite a bit about getting itself ready because they're over 1 billion people and they have a lot of needs, a lot of infrastructure needs certainly, and they have a lot of technical wherewithal. So they're going to be coming onto the scene too, and the Chinese are also trying to figure some things out. But there are certainly a lot of firms that moved out of China, and that was back in the first Trump administration, and even before that, because the Obama group was, while they had those strategic and economic dialogues, they were still putting pressure, not to this extent, but China has shown that they know how to pressure back. So it's caused everybody to have cooler heads, but it's been good for Vietnam and others to get some. But and we can't forget about Japan. Japan is sitting in an interesting spot right now because the yen is overly weak, and that's because of the global financial carry trade, because as long as Japan keeps interest rates low, it becomes the funding vehicle and therefore it gets sold and puts pressure. But the I would call undervalued yen, and when I checked with Copilot this morning, they on a PPP purchasing power parity, they have the yen as 38% undervalued to the dollar, and interestingly, the Canadian dollar 22% on a purchasing power. So I know we can play with that game all the time, but it does reflect. And more importantly, the industrial is going to shift enough, has twisted enough arms to get people to ramp up their defense spending. So it's not like the United States, and I've made this point elsewhere, the United States has run an oligopoly, if not a monopoly, on defense for many years, probably 7 decades, 6 decades. It's coming to an end. And you have very erstwhile competitors, especially in Germany and Japan, who can ramp up their defense spending and ramp up their defense industries, more importantly, to compete. So I think these next 10 years are going to be fascinating. And America may be pushing for some things that they may wish that they didn't. Again, I know that, in the Milton Friedman line, there's no free lunch. So even though we carried everybody's defense, there was some benefits to it. But those benefits, now we won't be paying as much, but we're going to lose a lot of the benefits that we had too. So it's far from a zero-sum game in the way that Trump wants to look at it.
Fascinating altogether. And I mean, also, one thing that's really interesting about this discussion is we've had, over 25 minutes of conversation. Nobody's mentioned Europe once, which does lead me to wonder just what the relevance of Europe is these days. And I suppose that links elegantly to, the article I had in the Times of Malta op-ed on Sunday, which was talking about particularly the threat to the Malta exchange, which is a small but remarkably well-formed exchange for a population of 500,000 people. But, the Chinese, they get by on at least 4 stock exchanges, 4 very large stock exchanges. And there's an issue where Chancellor Merz, who seems to be a hapless incompetent, which I think is actually the job title, the job description for being Chancellor of Germany these days, has been ever since the useless Angela Merkel. But he wants to put us onto a path to a European monobourse, which ESMA, the European Securities Regulator, also seems very keen on, having taken control of the regulation of all exchanges under its wings, entirely defying what's supposed to be national sovereignty that exists within the European Union. And I'm just curious about this, because I have to say, I think that this idea is beyond imbecilic when it comes to being developed. The idea that 27 disparate countries are all going to manage to work remarkably well with one single stock exchange, which Merz is extremely keen should be run by a group of blissfully ignorant of much of Europe's suburbanites from Frankfurt. Mark, what do you reckon to this whole proposal?
Well, it's comical, isn't it? It really is. I mean, here's Europe, contrasting it with the US securities markets. The US, an absolute dominant force in equities, 60% or something of the world's market cap is there, and it's kind of growing. And Europe says to itself, well, we need to sort of catch up. We need to do something about this. What's the best thing we could do? Oh, I know. Let's do the complete opposite to what the US has been doing over the last 25 years. That should work. If you look at the way the US equities market has evolved this century, there's really 2 primary characteristics, I would say. One is that, or at least relevant to this topic, one is the competition between exchanges. That has driven innovation. It's driven growth across the board, and different sectors catering to different needs. And the second thing, which is kind of corollary to that, is the way that, to its credit, the SEC under both types of administrations has always been very supportive of innovation in the non-exchange world, the ATS world, as they call it, where a lighter touch has allowed dozens and dozens of different ATSs to come up with different models for trading, and created, frankly, the most efficient and the most amazing trading infrastructure you could imagine. And the one thing that's totally missing from that whole structure by definition is that they do not focus liquidity in one place. It's allowed to spread around. So different people have different needs. And for the EU to say that the solution to its problems is to consolidate and effectively eliminate that competition is just absurd. You know, you'd almost suspect some kind of conspiracy there. You know, what can we do to make things even worse? So I've got no words for it, Patrick, really, in terms of, you know, a plan. I can only hope that as it gets sort of gets publicized and discussed and more broadly covered by, you know, the industry, that they'll step away from it, because I mean, the only other possibility is that, you know, if you're you know, if you're an operator of an independent exchange like Cboe and some of the others who, you know, the Swiss, Euronext, if you can come up with, you know, a competitive model to fight against that, then you're in luck. That's going to be a big boon to those types of players. Although I wouldn't put it past the EU to somehow, you know, ruin that model as well.
And here we are. I've just gone through the most incredible morass of church bells announcing that it's 5:30, I presume, with the end of the working day in Valletta. So I'm glad to say it just finished as you were concluding. But I agree with you, Mark. I mean, it's quite fascinating what a complete mess this is. Ira, do you have any thoughts on the idea of an EU monobourse?
I spend my waking hours worried about this, but let's go back to what Christine Lagarde was brought in to do, a capital markets union. And she pushes it whenever she can. Well, we got a ECB meeting on Thursday. Let's see if she entertains it, whether there's any questions about it. But if Europe doesn't create a monetary union, they have no chance, because as Mark talks about, 27 dispatchers, but certainly 19 different bond offerings. It's and subject to an attack, right? As Lagarde learned when she walked in the door, and she made that first faux pas, which was, we're not here to close market, to close trends, as she said. And the market went and started beating up what was previously called the pigs, and pushing out the spreads. And 3 hours later, she had to recant that statement, because really all hell was breaking loose in the bond markets. Now, if they don't form a capital markets union, they will always be subject to the desires of Germany, because Germany is the credit card that holds it all together. Without the German credit card, what would the cost of money be in the European Union? Far higher, because the market has, for the last 25, 30 years, assumed that the Germans will guarantee the entire edifice. Well, they better get that solidified. They tried with the PEP bonds and things, but they're not there yet. And with the rise of the AFD, and I'm not talking a nefarious rebirth of Nazi Germany, I'm not talking about that whatsoever, because the AFD was actually founded by five economists who were appalled at what went on in 2011, 2012, and 13 with the, you know, when the great financial crisis washed up on the shores of Germany, and really not in Germany but of Europe, and caused all that havoc. So they're not out of the woods yet. And Merz has been making certain comments because he sees, well, if they do this, you know, huge, as Draghi has talked about, the huge fiscal stimulus, and it gets done on a European basis, that you'll basically, through the back door, create a Eurobond and force Germany to swallow all this. They better hurry up. And they're talking about ramping up all this defense spending. And one thing Mr. Putin over in Russia is good at is looking through and seeing the fissures in any edifice. And there's a lot of fissures in the EU edifice. So they're on real borrowed time here. And that's assuming too that the AfD doesn't go back to the German High Court in Karlsruhe to look at this and say, hey, they're in total violation of the Lisbon Treaty, the Maastricht Treaty, the Lisbon Treaty. We got to put an end to this. And if the political noise gets loud enough, that could happen. Right now, Frederick Merz, I'm always thinking, to make nice because he's seen some good outcomes here for Germany. Especially with Rheinmetall and the German defense are now ramping up. But this is a very dangerous game that Europe is playing, and they have to be quick and very careful here. And I might add one more thing, that with the French 10-year yields going above Italian yields, to me, this is the greatest humiliation for France since 1871. I mean, how do they look at themselves?
So yeah, it's very difficult to manage to be terribly optimistic about what's going on in France at the moment. Where other countries are struggling with the concept of a 4-day work week, it seems that French robbers can manage to get away with about an 8-minute work week, but apparently at least a couple of them have been caught, which is at least heartening. Now we've got some great feedback has come through here from Messy Times from Chris Messina, and he started by pointing out that Canada has been free riding on the US for too long. Time to put on some big boy pants and do your own work. So that's coming from Florida. The main issue for the Chinese Communist Party is they're riding an angry dragon. The rest of population will be their destruction. I think also, the other problem is ultimately that China's just doomed to become essentially old before it will become rich with the way that the demographics are working. And we all love a good population pyramid, don't we, for a Sunday afternoon in order to look at where the world's going over the course of the macro term. And then finally, Chris says there's nothing sillier than trying to regulate one's way for a deep liquid capital market. Yeah, very good point, Chris. I think that's entirely reasonable pointer about the thing. Ira.
I never said regulate, and people before during COVID, even under what's his name, who passed away, the German finance minister, Wolfgang Schäuble, who had talked about the importance of not loans. And he talked about grants, but that they were going to have, quote unquote, their Hamiltonian moment, right? Because Hamilton didn't regulate himself to a capital markets union. He forced it upon by various decrees and machinations. So that's what they would have to do. I never used the word regulate because I don't believe you can do that either. The regulation will come later down the line, like in the United States, but it needs to be foisted upon. In fact, I think Binny Smaggy had a piece in the FT today, kind of pushing the same line, and he sits in a whole different seat now, but it's worth looking at.
Yeah, it's very interesting. It certainly strikes me that Europe is just utterly desperate. Anne, where do you come in this discussion between monobourses and actually what Chris Messina's just been raising? Thanks again for the comments, Chris.
Well, first of all, I don't think I could in any way outdo what my colleagues here have said. They've really added a nice round picture to the whole European situation. But the monobourse, I think it's really suited to the EU structure where they see themselves as some sort of almost divine, spirits that can mandate a 5-year plan, just like the Communist Party, as far as I can see. They don't believe in innovation, and in the same way that the Communist Party doesn't believe in innovation, it's harmful. It could disrupt things. So that's unfortunately, how I would view this whole situation. It's not surprising that they would come up with a monobourse, because they can't think outside of their own positions.
Their
In
own
some,
tightly packed regulation with whatever it is, 10,000 pages a year of new regulation on business every year.
yeah, well, it gives them a sinecure, and it's just it's not. You know, the problem also with Europe, of course, is that they were getting all of this cheap gas, which was um, allowed by Merkel to, Nord Stream 1, then Nord Stream 2, which of course is defunct now. But they were such an engine because of these things that she had helped to engineer. And now it's all coming to an end, or it has come to an end because of the expense of not just the energy, but their drive towards the clean energy. So it becomes an impossible task for them to grow, as far as I can see.
Yes, it has become. And speaking of impossible tasks, maybe that's a good time to just quickly segue to our book of the week this week. The book of the week is The Carbon Paradox, a climate action drama. It's by Renat Heuberger, Steve Zwick, and Marcus Hirschbrunner. And actually, they were all guests on our show just a few weeks ago, IPO-VID 185. With the eponymous title, The Carbon Paradox. It's an ambitious and genre-defying novel, a fictional work based on facts that explores one of the thorniest questions of our time. How do we fund real climate action in an imperfect world? Well, from that, let's go to, speaking of imperfect worlds, it strikes me there's a great deal that seems to be imperfect about the world of crypto. Mark, why don't you talk us through this deleveraging thing? Because it seems to me to be, again, I mean, anathema in the semi-European Union sense of the word to capitalism.
Yeah, I mean, I've steered clear of the crypto thing just through sheer ignorance and I guess lack of interest, which is not forgivable. But it's clearly it's on the agenda, has been now for some time, and I was struck, but I was quite shocked actually to learn about this issue around what they call auto deleveraging or deleveraging, a new word which I don't know how to pronounce. And what it boils down to is that certain of the exchanges have been entering into various swap contracts, and because they lack a central clearing infrastructure, these contracts basically turn into effectively a bilateral. And as a result, when the losing side essentially has gone broke, there's lost money, and because there's no central clearing and margin collection going on, basically the exchange closes it out, and the winner in those bilateral contracts just like, okay, you won some, but the rest of it you're not going to get. You just your profits are capped effectively by the losses that will be incurred by those on the other side. And that seems to me shocking, right? I mean, if I entered into one of those on the winning side, and I find out that actually my winnings are not as great as I thought they were going to be because of this rule, which I don't know if people are even aware of it when they go into it. That was surprising, and I guess the main point of raising this is not to get into the mechanics of it all, because I'm sure the crypto people will come into this and explain, no, you've oversimplified it. That's not what's happening. This thing is happening, and so on and so forth. But clearly, there's something inferior about that model, and so what it really pinpoints is, unfortunately, I never thought I'd be saying these words, but the need for regulation, right, is kind of obvious, and I can only hope that in the course of the U.S. government now has a policy of active regulation of this industry, that this is something that gains some attention. I don't know if it will. So far, you don't get the impression that the focus of the U.S. government is on controlling or helping the crypto industry manage its risk. It seems more focused on just growth for its own sake. So that was my observation on that one. It's not so much the specifics of that particular problem, though that it is significant. It's more indicative of the need for closer attention to be paid to this industry.
Well, I think the biggest problem, it seems to me, is that what we end up with is things that are allowed to call themselves exchanges, which patently aren't. I mean, they're kind of quasi broker-dealer model with a platform on the side, and therefore they actually discredit the exchange business because they're not neutral, because they're actually using a financial instrument in order to give people some sort of ability to use the exchange, as opposed to actually transacting trade. Maybe I'm somewhat antediluvian in that view. Ira, do you have any concept or thoughts about what's going on here? Ira's on mute. Ira, you're muted.
Oh, sorry. I apologize. No, I don't have really nothing in the way to add. I'm still trying to, not only Bitcoin, okay, I got what that was. Stable coin, for the life of me, I just, to me, I don't see how it's different than a debit card. And if I was a bank, I would be offering debit cards, and you can put your money in T-bills, and you can just keep taking them down and I'll pay you interest. So I really, I understand blockchain. I think I understand blockchain. I've invested in blockchain companies, and one as a venture capital, that didn't work out, but I thought they had really good technology. They were just probably a little bit too early. And I think blockchain is going to disrupt the entire Wall Street world as I see it, especially because if I can hold all of my assets in my own electronic ledger, it would be like, now I can hold my own stock certificates. So why do I need to hold them at the DTCC? And why do I need to hold them in street name? And why should Wall Street be able to make money off of lending my stocks out? So I think that's going to be very disruptive. They've been kind of slow, but I don't have it. I'm waiting to listen to Ann. I really have nothing to add.
Patrick, didn't FTX have some sort of mechanism that was a little bit similar? They applied for it. The CFTC was some sort of it's like a self-annihilating algorithm that they were proposing.
Yeah. Well, I mean, FTX also had something where quite literally they took the other side of your trade, which didn't make them exchange in any way, shape, or form. And they had a series of things where they could actually work out where the stops were via their automated market makers, so that they could then roam for the stops, which sounds like the ultimate. I mean, Ira, going back to the floor, or Anne, I mean, it sounds like the ultimate boondoggle for the old-fashioned floor local. I mean, you actually knew where the stops were before you had to go for them. You just had to roam over there, get the stops, and then you closed everybody out. Everybody lost money, and you made money. And I mean, that was built in. That was actually hard coded into the FTX system, which I think was the reason why I always said nobody in their right mind was ever going to buy the FTX system in order to use it in the future, because it was simply so corrupt.
Yeah. Patrick, if I can add one thing. So I was on the original committee of Globex, combining it with Aurora. I represented the CME, and we went and we met with the Board of Trade people. And when I saw the way the Aurora system worked with everybody's icon, that's exactly what it was. It was an electronic bag man. So we had come out of that area, and now we were going to electronic, because if I'm an order filler, if I can control the order flow, and I can direct who I'm going to, whether they're the best or maybe they're just one amongst many. But if I'm directing who's going to basically eat all day, that's taking the bag man from the floor and making it an electronic that much more efficient. So it's pretty funny when I hear that.
Yeah, and I mean, also, I mean, I'm with you on this sort of stablecoin concept, because I just don't get the idea of why you take the US dollar and digitize it on a ledger with a credit risk to some group of people that you don't know. Because I mean, we may all have worries about the Fed, but they do have certain sort of reasonable standing that does make you think that they'll still be around until the end of the month, which some crypto organization or other may just not be. And that leads to a huge cascade of risk across the world.
Well, isn't Tether located in El Salvador?
I think it quite possibly is, because El Salvador is a great crypto kingdom, as well as being the home of that amazing Supermax prison and a PR man as president.
I don't see how you control all of this without. I mean, it makes me laugh what Ira said about the electronic bag man. So I remember Aurora as well, but I didn't have the imagination to think of it that way. It just I have a hard time seeing this proliferation and also the minting of, the sudden minting of millionaires, billionaires through this, what I call Jack and the Beanstalk beans, magic beans, that it's really inflationary. I mean, if suddenly you've got 1,000 new millionaires who are out buying things that they, luxury goods and so on, certainly it adds to the money supply without any productivity.
And I mean, I think, yeah. And also there are all these people who think that they're going to be able to tokenize very ordinary commodities like, I don't know, cement or something, and that's going to suddenly turn them into wildly speculative items, at which point in time, well, everybody's going to be holding bags of cement in their back garden and nobody will be able to build anything because they won't be able to afford the cement. I mean, that doesn't really work to my mind either.
I don't know how you put together the fractional shares of these things. Maybe I just haven't studied it enough, but I don't quite get it.
No, and certainly, I mean, my one concern, Ira, about what you're saying though is that yes, I can understand it's a great idea to put into people's portfolio the power of having their portfolio, but does not just leave us with a digital variation on a theme of paper stock certificates, i.e. it's very difficult for registrars to end up knowing who actually owns their shares because they're all sitting there on some distributed ledger somewhere. And as we've already seen with different elements of the NFT market, if your DLT stops working because somebody doesn't upgrade it, then you actually have a monumental problem because all of your assets disappear.
There's so many bugs to work out of the system, and again, but Wall Street will continue to slow walk it because it's in their best interest to slow walk it, and maybe there's good reason for slow walking it. It bothers, when we had AIG on the cusp, and of course when Lehman went under, the problem was a custodial issue. And so if you could solve that custodial riddle, the one good thing about me keeping my stock certificates in my safety box was that I had them. Now when they're advocated, I don't know where they are. And the one thing that we learned coming out of the great financial crisis was cutting and pasting mortgages. That made things a little different. You had interest-only mortgages, you had non-interest bearing, so you were cutting and pasting everything anyway, and good luck going to rechase that down. So there certainly is no perfect solution as of yet, but it does get interesting.
I think the topic of
that is absolutely true. It certainly gets interesting. Mark, go ahead.
Yeah, the tokenization and the relevance of crypto and blockchain to all of this, I think it muddies the waters to a certain extent, because the concept of securitization has been around now for quite some time, and there have been failures, and the classic one was the mortgage-backed securities, where as Ira says, I think just the sheer complexity and identification of where the risk lay was a problem in its own right. I don't think tokenization of blockchains solve that problem just by their mere existence. What solves the problem is what the regulation and infrastructure and legal structure is around these things. And I think the tokenization is a distraction. It's a kind of headline grabber because that's the thing everybody's talking about today. But if you strip that out, the problem remains the same as it always was. And it's a problem worth solving, which is that how can you make securitization work in a very, very efficient way, so that it is delivering products that people want to invest in, and they can track those products accurately, and it's not subject to market failure. And that's a good old-fashioned market structure risk management problem, which, you know, in all fairness, the derivatives industry solves similar problems with the creation of, you know, the modern derivatives exchanges and the central clearing. So I kind of remain optimistic that we'll come out the other end of this with more product, more innovation than we started. But it won't be because of blockchains. It'll be because of good legal and risk management infrastructure.
And on that note, ladies and gentlemen, I think I'm going to call this a wrap. We've several other topics we're going to roll into next month's panel discussion. I just want to say a huge thanks to newcomer Ira Harris, who's given us some fabulous metaphors throughout the course of the show. Thank you very, very much for joining us, Ira. We look forward to seeing you back again in the near future. As always, our commodities doyen, and Berg, has been sparkling. And thank you so much, Mark Bettis, for your insights into so many things, not just including the DLT tokenization issue, with which I have to say I wholeheartedly agree. Why does it have to have a DLT at the end of it? Actually, it's a fundamental securitization issue. Ladies and gentlemen, there's not going to be a show next week because we are taking a Halloween holiday. But at the same time, I want to thank today our fabulous contributor, Chris Messina of Messy Times, who's been adding some great comments to what's been going on. And let me add a huge word of thanks to AJ Racy and Kim for being our production team today. And this is me, Patrick Young, thanking you once again, and Ira and Mark, for an excellent show. And we look forward to returning in 2 weeks' time with IPO-VID after we've enjoyed the Day of the Dead, Halloween, and indeed Guy Fawkes Day. Thanks for watching, and indeed, as always, have a great week or a great fortnight in life and markets.
Thanks, Patrick.
Thank you. Thank you.